Hey, good afternoon, everyone. It is Wednesday afternoon. It's 3 o'clock. Markets are closed, and we got more volatility today, which is what we expect. It is summer, and we have a really dynamic situation going on where you have tight old crop supplies with the oncoming very large and expanding carryouts that we expect, right? So that creates lots of volatility as people kind of try to jockey for position, and basically things just don't go in straight lines. So they bounce, and you have counter trend moves, and then you have increased sellings, and you just don't realize that the markets have moved 80 cents in a day until you look back at the price action and realize, geez, that was actually quite a wild ride and we didn't go anywhere. So let's look at what's going on and see how things moved from yesterday. This is a chart of November beans, and beans are really tough here because we left these long lower shadows. So this is November. July's is even bigger. Now, what I want to bring attention to is this little divergences that we have growing on the bottom of these charts here. I don't particularly love this divergence in context of the lower shadow, but it didn't confirm because we didn't finish a full reversal on this chart. So I don't think it's a tradable divergence, but it's there nevertheless, but not enough for us to say to negate this big down bar that we had yesterday, and you would expect this to go ahead and continue lower. So I still think November beans are for selling. I don't think it's a buy signal of any kind. I think definitely you don't want to take hedges off. Now let's take that hat off and look at our speculative hat in the front month, okay? Here we have this big consolidation pattern with a big breakout to the downside. And now today we leave an even bigger shadow on old crop than we had on new crop. And we also have a piercing pattern with a full reversal. Now we were unable, in a nice trick of the day, unable to hold $13, which would have been much clearer of a signal if we could have gotten back above, say, 1305, 1307, something like that, back above these lows. But from a speculative standpoint, you have to realize what this is. You have a long lower shadow, and you have another confirmed divergence. Let's look at that on stochastic. There's a little divergence. Let's look at that on force index. There's a little divergence. So your oscillators are saying, hey, old crop beans, July beans might be a little bit overdone, and we may need to move to the sideline. So we did that on speculative stuff today. For stuff that we manage, we moved to the sideline and just said, maybe we'll get a shot to sell this a little higher. We're not bullish. And there's nothing about this that is ragingly bullish unless you just have some fundamental reason to try to pick the bottom here, which we don't because we don't think the weather or the old crop supplies are tight enough. But nevertheless, it was a quick down move with the reversal. So we'll move to the sideline and see what happens. If we're unable to break yesterday's high or we just take off lower, we'll probably resell it, or we'll just be patient and wait and see what happens for a little bit, and hopefully get a shot to sell this thing just a little bit higher. Anytime you break a significant psychological number like 13, it's pretty normal to break it, test it, and a lot of times you'll even come back up through it. $14, it took us quite a while to really break it definitively. It held it multiple times. We couldn't ever break 14, so and if you look at 15, 16, you look at how many times it took us to break 10 on the way up, 11, 12. Every time we hit a big round number, it just takes lots of time because traders get greedy above it and fearful below it, so it pushes it. So I'm not surprised at all to see a little chop right here at 13. This morning I thought, man, we're going to go straight to 12 because that was really bearish. But, you get up and leave your desk for 5 seconds to go to the bathroom, and all of a sudden you're 30 off the low, right? And that's just how these markets are going to keep being for a while. So I think hedge-wise, got to keep in your hedges. You're not going to be fast enough to put them back on. Spec-wise, you can move to the sideline and hope for higher prices, but mostly that's just risk mitigation, not being greedy, right? Corn. This is old crop corn. Same thing as beans. Big down bar to start the day. We almost took out the lows all the way back here, which would have been super bearish. but it bounced and it was unable to make a full reversal, but it did retake yesterday's low and leave this long lower shadow. So if we see strength coming up out of here, we could come challenge the high from Friday, but we'll just see what happens. I don't think there's anything fundamentally really that supports that move. So our view is still going to be bearish below this daily cloud, bearish below Monday's or Friday's high, and we're going to keep looking lower in the July corn contract. As far as December corn, really no change. It was weaker than July, and it did leave a lower shadow. Which would have been nicer if we'd have just seen a big definitive break, but rain just hasn't really fallen yet, so it's kind of waiting for confirmation there, I think. But I think the selling pressure up in this area is really going to be too much for us to overcome. I think anybody that's not sold is, if we do get back to that 550, 560 area, I think that's going to get sold pretty heavy. So we're going to be really patient with short positions and hedges in this area, and we're going to let this cloud kind of be our definitive guide here and tell us when we need to get into a re-ownership position, and we'll be watching the weather and those kinds of things. But because remember, we're not worried about giving up something in this area. To me, this is really kind of no man's land, because if we're going to tighten this balance sheet and we're going to get a situation that's going to burn up Iowa, like we've been saying, we want to defend against $6.50, $7, $7.50, $8 corn, and we're not really worried about 520 to 550 or 60. Our downside risk is worth risking this to the upside, because we could be talking 450, 420, 410 corn if we do start raining. So we've got to keep our hedges on, and we've got to be careful. Now, speculatively, you can be a little bit more aggressive to the upside if you break these recent highs, but I think you're taking a really big risk, and frankly, the reward to risk ratio is short from this range. So you want to just keep betting that range is going to hold until it doesn't. So and even if that takes 5, 6, 7, 8 times, you would rather keep selling it, because that is a really big, nasty range, and you've got the benefit of this daily cloud, and you've got the benefit of wave counts too. So I think short anywhere below 570 is a good short, and you just got to keep selling weakness. So there's nothing on here that I would view as a buying opportunity. Okay, now wheat. Let's look at wheat here. Wheat did have a reversal today. We have a 9 count. We tested the bottom end of this range, and we found buying support right down here at the 760 level. And this is another situation like wheat and corn, or beans and corn, where you leave your desk for 5 seconds and you come back and you're 30 off the low, and there's just nothing you can do about it. Because if you watch wheat trade, it seems like it's trading in nickel increments instead of tick increments, which would be a quarter cent like corn and beans are doing. So wheat is just extremely volatile and extremely difficult to trade. So big picture, what does that mean? Well, look where we are. We're below our hedge line. We're below our cloud. We have the benefit of this big move lower. We have a false breakout to the downside. We have a false breakout to the upside. Now we're trapped back in the middle of it. I would expect maybe a little bit more strength, but I think this $8 level is going to get sold, and going to get sold pretty heavy. And some people have been asking, what's driving wheat? Why would it go lower? We have no crop. Well, what's driving it is Russia and just world wheat supply, right? We may be tight in Kansas. It doesn't mean we're tight globally. So remember, these are global markets, not regional ones, and we're trying to balance global supply and demand. So when Russia just starts, and all of Europe is just collapsing their prices in order to move product and make room for a big new harvest, it's bearish for our market too. So here we are. Maybe we'll find strength and support. Maybe we're done going down. We'll take it a day at a time and see, but I don't think we will be for now. I think $8 is going to be resistance, and we're going to keep looking lower in wheat. All right, that's what I have for you today. We'll be back with you. Jeff will do the videos the rest of the week and the first of next. If you have questions, please call. We're here to try to help you get positioned correctly and to manage your risk. Everything about our analysis is geared towards managing your revenue and protecting your downside risk, because in this environment, that is exactly what you pay us to do. So the recipe is there for lower prices. We just want to be aggressively short and make sure that we're protecting ourselves every step of the way. There is risk trading futures and options, and you should only do so in light of your own financial condition. We'll talk to you later on. You guys have a great weekend. See ya.